Hey guys, Mike here. So obviously huge sell-off in the market today, and it really had to do with multiple reasons. I think it had to do with three things going on here, okay? And one of them I sent to the members this morning by saying, look, you got announcements from all over the globe from central banks raising interest rates. All right, that's just what happened. This global economy, that liquidity is coming out, right? They're going to start raising those interest rates, okay? Make it more expensive to borrow money for companies and people, and then some. So, that's one problem you have going on. The other one was what the Atlanta Fed actually come out with, which I think shocked the markets really, because it goes against what Jerome Powell said. And it doesn't mean they're right, but they're coming out here and saying that they're predicting 0% GDP right now currently, and then they come out and say after this morning's housing starts, which by the way the housing data was disastrous, report from the U.S. Census Bureau, the nowcast of second quarter real residential investment growth increased from negative 8.5% to negative 7.7%. And so basically they're saying the economy is already grinding to a halt and pretty much we're already in recession maybe. And so I think that took the markets maybe off guard or whatever. And, because it goes, throws basically egg right in the face of the Fed yesterday in their charts, because they're saying, oh, no, we're good right now. And, which, by the way, do I believe anything the Fed really puts out? No. How could anybody, right? They've lost their credibility. It is what it is, because they've been so far off, not even in the same ballpark, that, I don't know about you, but I don't know anybody can actually believe what they're actually projecting right now. And, of course, he can't come out and, all doom and gloom anyway. And even if he knew, right, he couldn't say it because, man, that would be disastrous, okay? And that's why he cut that reporter off very quickly when he asked him about, are you trying to induce a recession, okay? But I did, after a comment yesterday I read, go back and look at him talking, and I will say, I think they're right. When I looked at it again, there was a curtain behind him, and he actually did look like a hostage reading, a hostage letter, and the kidnapper was behind the curtain, like shoving a gun or knife in his back or something, right? He just didn't look very good. And it's like, also you got to remember he has egg all over his face, because obviously during the last meeting he said, oh no, 75 basis points, not even discussing that right now. And so then he had to go back on that. And I'm going to get a little more into that probably tomorrow, because I'm going to show you why this actually really happened. And this isn't the first time, okay, that he's actually been involved in something like this. And so I think you might be interested in that. But so that really is the first thing, actually the first two things actually. The third thing is what's happening tomorrow. You have quad witching, or some people call it triple witching, happening tomorrow, and Goldman Sachs estimates that $3.4 trillion worth of options will actually be expiring. So you will see a ton of manipulation, which is maybe what you're seeing today as well. And this kind of breaks down, where they think all the options are and stuff. You can see AM and PM settlement. And of course this happens 4 times a year, and so that's why you see a lot of volatility, because like if there's more options out there than puts, then you might see the market try to push it down and try to get those people to sell out of their call option and take what profit they have, if they have any left. And if there's more puts, you'll see the opposite. So it's going to make for a fun day. I think that's maybe what you were seeing today, because I read a week ago there was more calls than puts, but I hadn't looked into that since. But so that right there creates volatility in itself, and those three things obviously did not help anything today, right? And like I said yesterday, there's no reason for the market to go on some huge run. That means we're going to have some kind of bear market rallies and algorithms doing its thing. But as far as news and data and everything else, that would literally make no sense. But again, I never get surprised by anything this market does. And looking at the charts real quick, starting with S&P, you can see yesterday it gapped up, tried to fill that gap, and ended up falling obviously today, gapping down again, creating another gap. But it's right on the edge of the channel, and we're going to see, but it did fall below that support line. So we'll see what happens there. And then obviously here's your NASDAQ, still in that channel, been in the channel for 5.5 months now. And so it's still, it tried to fill the gap, but not quite. So you still got those gaps above them. And so we'll see on that one. And then, of course, the Russell, which I don't usually cover, but the Russell is the one that probably worries me more than anything, because it's only in the middle of that channel. And so it's got a long way to drop to even stay in the channel. Obviously, the two gap fills not even close. But, if you remember the last job report, who lost jobs? It was the small cap companies, right? Small companies. And so they're usually the first one to lose the jobs, because it's hard for them to raise capital in high interest rate times, that kind of stuff. And so, you know, when you look back here's your next support lines. And so you're looking anywhere from a 2 to 5% drop, which could come pretty quick if the market continues to sell off. And it's already, I believe, around, 32% down as of today. So you can be looking anywhere at 37, 38% down by the end of next week. So that's going to be interesting. And don't forget to hit that like and subscribe button, guys, if you get something out of this. And then lastly, I'm going to show you something that sums up what's happening right now. And that's why I tell people, don't check out, pay attention, educate yourself, remember these times, because I promise you, you're going to be telling your kids and grandkids about this and actually educating them. Because if you start to see somebody like this in the future and say, hey, kiddos, I went through this back in 2022, and I'm telling you, this is what you need to look out for. But this right here just sums it up. And this is the amount of wealth that has been lost right here. And this is in trillions, right? From the bond market to the stock market to the crypto market, you name it. And, you know, around, I don't know, close to 15 trillion it looks like right now, which is the most ever. I mean, you go back to .com, 08, it always gets more and more, right? But, you know, this is crazy. It shows how much crazy times we actually live in right now. And really what's happening is simple, guys. They're trying to get the valuations down, right? The NASDAQ the other day, you know, its PE ratio, you know, hit this, you know, average right here. But you can see how much farther it actually could drop, okay? It's not like it has a stop right here and go back up. And then you got the SPY is doing the same thing, the S&P here, right? It actually hit around 15.7 the other day, went back up. So maybe we're still around 15.7 now. So it has dropped. But you can see, you know, it obviously can go farther down. You know, that's the average. I think it actually hit that 20-year average just the other day. But, you know, this right here, you see in 2020, 2018, all the rest of them, you know, it's dropped a lot. But, you know, in these other times, you didn't have, you know, where it was, $8 trillion worth of stimulus put in the economy during these other times. And so that's why you see that's a huge bubble up there that's been popped and coming down. And so, you know, we just got to see how far these are going to drop and what the market wants. And remember, on the S&P, you hadn't seen energy pop yet, you know, and so when that happens, right, then you could absolutely see those, you know, numbers between like 12 and 14 as far as PEs or whatever being hit. And so that's where we're at. I mean, that's what you're seeing. It's just, you know, volatility is the only certain thing we know about this market. And like the one thing, you know, you're starting to see a lot of YouTubers, the news, I mean, now they're fear-mongering the heck out of people, telling us it's going to be, the real estate market's just going to crash and burn and all that stuff, and they're comparing it to 08, and I'm sitting there going, look, I'm not a real estate expert, but understand, people have more equity built up in their house than they ever have in history. I forgot the number I read today, but it's in history. And 90% were, their mortgage rates were well below what it is now. Okay, so, you know, in 08, you didn't have that. You had the opposite. Right, it started to crash and everybody went under, right, on their equity, and so everybody was upside down because they had all those, you know, variable interest rate mortgages and all that stuff. And now you just don't have that. Plus, you got the banks a lot more, supposedly, you know, a lot more cushion and stuff in there as well. And so I don't understand that part of it. Do I see a slowdown? Sure. Do I see some parts of the country, you know, seeing major decline in the prices? Sure. But what caused it last time was you had so many people getting foreclosed on. That should not happen this time if the numbers are correct. Again, just going off the data, but that's just me. I mean, I know we're well under in our mortgage and we have equity built up. What about you? You know, I mean, I know it's different in every part of the country, but, you know, take all that with a grain of salt. And if you know a real estate expert, ask them. Maybe they have a different opinion. But anyway, just want to put that out there to you. I'm going to come up with more, I guess, detailed videos tomorrow. I'll have a lot more time to do some stuff I've been wanting to do. But anyway, hope you guys got some out of it. Hit the like, subscribe button if you did, and buckle up for tomorrow. It'll be fun. See you later.